and these insurance people decided to cancel.
Hey, Ben, can I ask you a question?
Yeah, go ahead.
Is it true that these insurance companies are canceling policies while these fires are going on?
Yeah, I've been seeing a lot of those headlines too, and that's just not accurate. I mean, at the end of the day, there are regulations in California. It's called Legal Days Notice, and those regulations they basically govern how insurance companies can cancel or non-renew policies, and there's some very specific rules around it. So, for example, within the first 60 days of a policy, the insurance company can cancel with 10 days notice. They have to give you 10 days notice, but that's within the first 60 days. And that's after they determine something about the risk that they're not comfortable with. And so that's only within the first 60 days. After that, they can cancel your policy for things like non-payment of premium or for materially misrepresenting the risk. So for example, if you lied on the application, and if that's the case, they have to give you 20 days notice. After that, and by the way, that's why they can cancel your policy. After that, their option is to non-renew your policy. And that's what we're hearing mostly about, non-renewals. But non-renewals, they have to give you 45 days notice before your policy can be non-renewed. So everyone in California right now that is experiencing these fires.
So they wouldn't be canceling right now.
They can't. It would be illegal to do that. It would be illegal to do that. Now, of course, I sympathize with these homeowners because they were non-renewed and then they weren't able to secure new coverage. But let me ask you this question. If I said to you, hey, listen, I want you to bet $100 that Jake Paul knocks out Mike Tyson. I want you to make that bet. But I can guarantee you that it won't happen. Would you take that bet?
No.
But so I wonder why it is that people are expecting insurance companies to provide coverage on properties that they know they're going to lose money on.
So is it just specific to California, or do you see this in every state?
It's not in every state, but it's going to be states that have what we call catastrophic prone areas. And so California deals with wildfire risk and with earthquake risk. Those are the catastrophes that insurance companies worry about in California. And here in Florida, we worry about hurricanes. And so, we want an insurance company to insure a home on an island that is prone to high winds and prone to flooding, where the insurance company knows they're going to take a total loss. Why would I expect an insurance company to take that? Now here's what makes it worse. Here's what makes it even worse. There's this concept in insurance where there's a price for every risk. And the problem is that the regulatory environment does not allow insurance companies to charge an adequate level of premium to compensate them for the risk that they're taking. And that's why you've heard about all of the big carriers, all states and state farms, USAA, they've all decided to stop writing in California because the regulatory environment does not allow them to charge enough premium for the devastation that they are bound to pay for, which is what we're seeing.
So what kind of coverage, what do they do to protect themselves to have coverage for wildfires?
Well, so that's a challenging problem. So a lot of the states, so for example, in Florida, we have Citizens Property. I forget exactly what the entity is called in California, but there is an entity in California that is a state-run entity that provides fire coverage. But that coverage, there's a lot of challenges with that. The coverage is very minimal, it's expensive, and then also too, there's this question as to whether or not that state entity can remain solvent in the face of some of these catastrophes that we're seeing right now, where thousands and thousands of units are being burned in California right now.
So what does a policy owner have to do per their state?
So listen, if we're talking about what options do homeowners have, there's long-term options and there's short-term options. The long-term options are ones where you've got homeowners need to join advocacy groups and lobby for legislation that brings change to the market, so that it is viable for insurance companies to operate. So that's part one. So there needs to be regulatory reform in California, so that insurance companies can actually profitably operate in the state. At the end of the day, insurance companies are for-profit entities. Let's make no mistake. Insurance companies aren't created to lose money. There's no enterprise that is created to lose money. No one's upset that Tesla is selling their Model X's at that price and suggesting that they should sell it cheaper and sell it at a loss, right? So We've got to make it so that insurance companies can actually make money. The other thing too, though, is about thinking about all of the types of things that you can do around your home. So, for example, making sure that you've got what's called a defensible perimeter. So you have to have at least 5 feet between your home and anything that can combust. And all types of studies show that if you can maintain your property that way, that you have a much better chance of surviving these fires. But then there's this question also too around where we're building. And if these are going to be cat-prone areas, we need to rethink where we live. That's at the end of the day. It's just that's just the way it breaks down. So homeowners need to be thinking about both of those dynamics.
Thank you.
Yep.